Today, we're diving deep into SoFi, analyzing key data points, market movements, and everything else you need to be aware of. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's get straight to it. SoFi experienced a slight decline of 0.71%, reaching a low of 12.49 cents and a high of 12.94. Despite this dip, the stock maintained some crucial levels. We'll break all that down shortly. In terms of trading volume, SoFi had 40.4 million shares exchanged, slightly below the average of 47.4 million. Interestingly, there were several large transactions above 100,000, including notable ones of $1.9 million and $1.6 million. This suggests an unusual level of activity. Expect more movement tomorrow, which is likely to be highly volatile due to quad witching. This event alone is enough to inject significant fluctuations into the market. Looking at options data, approximately 7.12 million in call contracts were traded versus 4.03 million in puts, indicating a relatively bullish sentiment, with 46% of the options leaning optimistic. The call options showed a concentration around the $13.50 to $14 range, while bearish traders expected the price to dip below $11.50. With tomorrow being a critical day, traders are preparing for potential swings in either direction. Analyzing open interest, significant contracts stand out. 19,000 contracts at the $10 strike price, 15,000 at $12, and 25,000 at $13. If the market gains traction and SoFi moves closer to the $13 level, short sellers and market makers might react aggressively, trying to influence the closing price. This makes tomorrow a high-stakes trading day, so it's important to stay aware of these developments. Interestingly, there was no company-specific news affecting SoFi today. Instead, the stock's movement was largely influenced by broader market reactions. Investors were still digesting statements from the Federal Reserve, particularly regarding potential interest rate decisions. Additionally, jobless claims came in slightly lower than expected at 223,000 versus the anticipated 225,000. While lower jobless claims are generally positive, they might not favor rate cuts, which the market reacted to accordingly. The overall market had an odd reaction to Fed Chair Powell's statement, initially disregarding his indication that no rate cuts were expected soon. Despite this, the market speculated on a possible May rate cut, leading to some short-term optimism. However, this expectation has since been adjusted. On the insider trading front, two notable transactions occurred. One involved Kelly, who sold 33,000 shares, and another was Jeremy, offloading 68,000 shares. Neither of these sales was for tax purposes, meaning they were direct sell-offs. Some investors might interpret this as a bearish sign, but considering that SoFi's earnings report is already out, these sales may not be cause for significant concern. If insiders were truly bearish, they likely would have sold immediately after the earnings blackout period ended. Shifting focus to short interest, short sellers returned 79,000 shares today. This is noteworthy because covering shorts on a red day suggests confidence that the stock won't drop significantly lower. Currently, 12.29% of SoFi's free float is shorted, amounting to about 132.43 million shares. The minimum cost to borrow has adjusted, which is another potentially positive signal. Through IBKR, there are over 10 million shares available for shorting, and the cost to borrow sits at just 0.27% annually, making shorting very cheap. If bearish traders truly believed SoFi was heading downward, they have plenty of ammunition to double down. The fact that shorts are returning shares instead could indicate a shift in sentiment. On the secondary market, we observed significant transactions that contributed to the stock's movement. Early in the day, an entity purchased 5.3 million shares at $1.26, helping drive initial momentum. Additionally, Dark pool transactions showed large trades at $1.39 and $1.38, with numerous smaller trades throughout the day. All of this suggests that institutional investors are actively engaged. SoFi closed at $12.64, just under the S2 support level of $12.72. This makes $12.72 an important resistance level for tomorrow. Beyond that, key resistance levels stand at $13.59, and $14.53, while strong support is at $11.31. Given the current market conditions, it seems unlikely that the stock will drop to that lower support. There were no new analyst ratings today, but technically speaking, SoFi managed to hold above its ARMA level at $12.44, which is a good sign. The only technical red flag is that the stochastic RSI indicates overbought conditions. However, stocks can stay overbought for extended periods, so this isn't necessarily a concern as long as momentum remains strong. If SoFi continues its upward trajectory and maintains support above key moving averages, the next critical resistance points are at $14.53 and $14.59. These correspond to the 50-day and 100-day moving averages, making them important benchmarks for future movement. The stock appears to be working its way back into the $13 to $17 range, which could be its new trading zone for the foreseeable future. While short-term fluctuations are expected, this range seems like a reasonable target given current market dynamics. In conclusion, tomorrow is shaping up to be a highly eventful day for SoFi. With options activity heating up, market sentiment fluctuating, and technical levels being tested, traders should be prepared for significant volatility. Keep an eye on key resistance and support levels, as well as any shifts in short interest to gauge the next potential move. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.